Hey everybody, it's Michael here at Omnia. I want to thank you as always for taking a little time out of your busy day to sit down with us as we consider the source. I'm really excited about our conversation today because we're joined by a very special guest. This is a Ron Sandhouse who's joining us from J Ventures all the way out in sunny California. Hey Ron,
Hi, Michael.
welcome. Thank you for joining us.
Thank you for having me.
Rather than get into your whole bio, why don't you tell us a little bit about yourself, what you've been up to, what you're doing here today, and welcome.
Sure, thank you. Yeah. So first of all, Michael, I'm an impact investor. I've been investing for the last few years. Today, I advise and I invest through funds with about $2 billion under management. And previously, I've been in the tech world for about 25 years. Out of which 20 years I've been in the corporate world where I ran and grew global startups in companies. So I'm the crazy guy that they brought in to take an idea and turn it into reality. So I'm very accustomed of envisioning the future and then creating it.
Sure. Great. So we're talking today about impact investing, right? Mm-hmm. And I understand that that's where you spend a lot of your time right now. And it's a topic I'm passionate about. I'm sure you're passionate about it as well. But why should people care about impact? Why should people be thinking about impact investing? Why do you do it?
Right. Well, I look at impact investing, I would say, because of three different things. The first thing, Michael, is managing risk. And what I mean by that is traditionally when people make investments, they don't really think about the risk of the portfolio, or they think that they don't have risk. And I'll give you the example. The people that invested in Philip Morris, like in the 50s and 60s, that was a great investment. They never imagined at some point that this thing will become taboo and an issue. And more of companies that sit today in portfolios that look good are going to become problematic over time. Of course, energy and even some stuff in the food industry. So first is managing risk. The second one is capturing opportunities, capitalizing on opportunities. There are today close to $12 trillion, according to research, of opportunities in the areas that have social and environmental impact. That domain is becoming bigger and bigger, and as a result, the investment opportunities are better and better. And the third one, which I'm very passionate about, is driving a paradigm shift. When we think about investing, typically we think we'll put our money where we'll make the biggest return, we'll ignore what happens with it, and then if we want to do good, we'll put our money in philanthropy. Okay, I don't think about it this way. Okay, what I'm looking for, which is really the direction, for the last few years, is where can I deploy my money in such a way that will also do good in the world? And by the way, I'm not alone. There's close to $30 trillion that are pouring into that notion. Okay, that companies should not also only be doing well, they should also be doing good.
Yeah. And I think that's a really important point that though they may be somewhat related, impact investing is very different than philanthropy. And I imagine there are probably some mindsets in philanthropy that serve you well in impact, and there are others that probably don't. Could you spend a little more time talking about that difference that you see between philanthropy and impact investing, and where's the line?
Sure. So let me actually start by giving the opposite, which is why they're the same. So, the common between philanthropy and impact investing is that both are meant to do good. Mm-hmm. And, even philanthropy, like one of the best ones, are the ones that look for performance. They actually try to measure the performance of the outcome. The difference between philanthropy is when you put money into philanthropy, you don't expect to get a return, right? You put your money in to further a certain agenda, social and environmental one. When you put money into impact investing, you expect to get a return. So one is non-profit, the other one is for-profit. And when you put money in impact investing, that money goes into companies that take that capital and create good, and then reinvest it and become bigger and bigger and bigger. And that's really the notion behind it.
It's really interesting. Another thing you said that really piqued my interest was your second point about capitalizing on opportunities. When I hear opportunity, I hear return and also risk. I think there's been a misconception that if you want to be in impact investing, that you're leaving some return on the table. Again, I think that's a misconception, but I'd really love to hear your take on that topic. So the opportunities in impact investing, how they relate to risk and return.
Right. So people used to think that impact or having a social environmental agenda goes against profit. Okay. The truth is that that's not true. That's part of the paradigm shift. And I'll give you one. I'll share with you the poster child in the industry. If you take a look at an example that everyone knows is Tesla Motors. Right. Tesla as a company creates a huge positive impact with transitioning vehicles from moving to fuels that are creating carbon emissions to reducing carbon emission by electrification. When you take a look at the profitability and you take a look at the value of the company, today the value of Tesla Motors is bigger than all the other automotive companies combined. Okay, so that's one example. But you could think of others as well. You know, a company that is using AI for medical and as a result allows for, you know, cheaper access, okay, for example, to medical. They will make money, they will charge for the service, but they will also be doing good. They'll provide a service that otherwise wouldn't be affordable or accessible to people in the world. So the two things are not necessarily different. And there's a lot of opportunities once you start to look.
What might be some other sectors? So we've talked a little bit about technology, healthcare, other sectors of the economy or types of companies that can have a really positive impact in the world. Are there various sectors that you think have more promise when it comes to impact?
Right. First of all, it's a great question because the opportunities are out there, and our job is to find those opportunities, right, and to look at them. So first of all, in terms of sector, healthcare is a very big one, obviously. Okay, lots of money there, and it could be used in different ways and deployed in different ways. Then areas around climate technologies. Think about energy, electrification. Smart cities is a big topic as well. And then the other one I would say is there's domains related to agriculture and food. We start to see transition of consumer preference as well. Think about Beyond Meat, okay,
right,
which is a multi-billion-dollar company, okay, or Impossible Foods, okay. All of those are companies that created unicorns, and there's more and more of that happening. And I can share with you some concrete examples.
Sure, I'd love to hear them.
Yeah, so a few companies come into my mind with technology where we're at a very lucky time of age because a few things come together. Semiconductors are becoming cheaper, AI is becoming more accessible, compute is becoming cheaper. So it's kind of like a perfect storm. One of the companies that is one of my favorite is a company that is out to reduce the severity of accidents. If we take a look, there's first of all 1.2 million people killed in accidents every year. 40,000 in the US.
Wow.
So think about it like a 747 going down every single day.
It's frightening.
Okay, and we're used to this, right?
Yeah.
It's unbelievable. And there's 10 times the number, close to 10 million people that are injured, going to severe injuries. Now, what happens is when there's a severe accident happening, imagine, the first responders, first of all, it takes them time, they come to the scene, they try to understand what happened, and then, what they do is they take the people and they bring them to the closest hospitals to be treated and checked. But what if there was a way for them to know what was going on before they even left the hospital, okay, before they even left the location? So there's a startup that is there today, and what they do is they have a small sensor that is, you stick on the windshield of the car. Whenever there's an accident, they analyze the signals, from the cloud. They take those signals they process it on the cloud, and they can see what happened to the car. Did it flip over? Did it have a very hard, collision? And they simulate the effect on the body, the brain, the lungs, the skeleton. So what happened next is that they transmit that information within a second to the first responders. So when they leave, before they come to the scene, they bring the right equipment, and they know where to take people to the right hospital and to take them to the right doctor and prepare them in advance. Now, those few hours at the beginning are critical for the care. So it has the potential of reducing severe accidents by 30 to 50%. This is a big deal. And by the way, they can make a lot of money out of it because they also figured out that insurance companies have interest in that. They can understand what happened to the vehicle. So they have a business model that's highly profitable. And that specific company got investments, from Volvo and BMW and Toyota and a bunch of other companies. So there's, this is a big deal.
So it's taking, some technology, marrying it with healthcare, and really this symbiosis of the two fields having a positive impact on the world, having a successful business model, being able to generate returns while making a positive impact in the world. And that's a pretty special thing, right?
That's a big deal.
That's very cool. So that's a nebulous concept, though, sometimes, like impact in the world, right? How do we measure impact? Is there a common, set of tools that we can use either to determine the impact we're having today and or what we're moving towards, together?
Right, so that's actually a wonderful question that you're asking because it's the most important one. If you take a look at, I have not seen a company that said, I'm out to create evil and bad things in the world, okay? I say, I'm out to create good. Well, your good may be different than my good,
sure,
right? So how do you actually measure that?
Right.
When you start to take a look at it, there's multiple initiatives out there, okay, for measurement. You got the Impact Management Project, you have IRIS, and all of those attempt, and by the way, there's a really important work done at Harvard, impact-weighted accounting.
Okay.
And the idea is that you can normalize the impact in the world. So like, what does it mean when you create 1 ton of carbon emissions in the world? Well, we know the damage. Okay, we know the damage to human beings. We know the damage, like there's actually a dollar amount, okay, that this costs for the planet. So there's actual work to normalize all of that and to measure it, okay, in dollar terms. And when you start to use those, you now start to create a framework that allows you to measure things in the same way that you measure profit and risk. Right? Profit you measure in dollars. There's the general agreed accounting principle, GAAP. Risk, you know the percentages and variation. Same idea.
This is like gap for impact.
This is exactly like GAAP for impact. In fact, people call it GAPE, General Agreed Impact Principles.
Wow.
So that's where it's going next.
That's wonderful. So there's been a lot of progress in sort of standardizing these measurement metrics so that when you're looking at opportunities, you have a way, just like we measure investment return, to measure impact return.
Right. Most of them are there. Just to give you the full answer, not everything is there. Some stuff is harder to quantify. But look, when I take a look at investments of companies that deal with climate change, I ask them, like, how many tons of carbon do you take or do you conserve from the environment? And then, I can go and actually convert that to dollars. Okay, there's a way of doing it.
Sure.
And for companies that it's harder to measure, we start to look, okay, what is it that you're actually producing? What's your product or service? And like, what's the measurement, the key performance indicators that if we measure that, we know that you're on track? Like, how many people have you impacted?
Right.
Okay, so that's the kind of stuff that we look for. There's always going to be a measurement that will be correlated to the intent of the impact.
And intent is a great point, right? So there's so much out there, and I think this is a trend or a movement or whatever you want to call it. How do you separate the real deal from the pretenders? People who may just be saying that, like, hey, we care about all of these issues, but it's really a marketing exercise, right? So I think there's some of that going on. That's my opinion as sort of an outsider on that. I'd love to hear your thoughts on that.
You bring a great point, because human beings are kind of funny that way. When they see money, they're going to say, hey, let's find all sorts of ways to get it, okay? Right. But it may not be always genuine and real.
Sure.
So I would say that the same way that when we make investments in startups, we want to see that we assess the quality of the individual, the CEO, the management team. We also assess their intent on impact. We ask them, what is it that you want to create in the world? Why do you care about this? We ask the employees, do you have a mission statement? Okay, how do you handle certain things? How would you handle things if things that don't align together for you? Okay, so those are all the things that we check. And then we also check their history. Okay, if they done stuff in correlate like that, if they always, been like in the gambling industry and all of a sudden like they just discovered, like this newfound world.
Right. Yeah. They have a great, gaming business.
Right, yeah. And then we measure their performance over time. We ask other investors. We definitely collaborate with other impact investors, and we ask them. There's also a reference check on all of those things in the same way that we do for regular investments.
So it's really taking, I think, all of the due diligence you would usually do in the investment world, putting on top of that another layer of due diligence from an impact perspective. Maybe you're looking at ESG metrics, it's environmental, social governance. There's another term out there, SDGs, which is the Sustainable Development Goals. And it's really taking your traditional investment due diligence. It has to be a good investment, a good business first, and have this impact element in order for it to really make sense.
Right. Now you're touching on the heart of how they actually do the method of impact investing. So I would say that there's really 3 things that we do. The first one is we do a regular diligence like any other investment. Is it a good company to invest in? Are they going to be profitable? How fast they're going to be profitable? How they'll use capital? What's the risk, behind what they create? The management team, all of that. And if it's a good investment, then we move to the next one, which is, we check, there's a whole checklist of do no harm. Okay, are they in an industry that we don't, we just don't want to invest in those industries? Those are harmful industries. Okay, like arm, tobacco. Okay, those are like do not invest list. Immediate no. We also check how do they treat their employees, things of that nature. And the third thing is, are they actually doing good? Okay, so is the product or service that they're creating out to create good? And if so, how many people are they impacting? In what way? Okay, like, is it really making a difference, or are we creating flavored water for Beverly Hills people?
Right.
Okay, so we measure that. And by the way, the interesting thing is that if they create a lot of value to a lot of people, guess what? They also create a lot of profit many times. There's a correlation.
Yeah, it's really interesting. Now, I know you and I could probably talk about this for hours. We're going to take a break. This is actually going to be a two-part segment. So I want to thank everybody watching right now for your time and attention. Really appreciate it. It's been Michael and Ron talking about impact investing. Thank you. Have a great day.